What's up? What's up? Welcome to the Trader's Army Market Debrief and Market Pre-Brief. It's our week in review. Hopefully this is something that you guys find interesting, enjoy seeing, and are going to find useful for your trading and investing. If you are new to our channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates and all that fun stuff. Let's go ahead and start by looking back. What happened last week in our markets overall? So the first thing to think about is that we had more records, record highs in the S&P and the Dow, the NASDAQ, the Russell. The Russell didn't hit any records, but the S&P and the Dow Jones all hit records last week. But the family is veering off the path, and we'll talk a little bit greater detail on there. And one of the things, if anybody has listened to some of the other videos that I've done or some of the commentary I've talked about, we talk about the relationship between the indices. The S&P, the Dow Jones, the NASDAQ, and the Russell are like a family. And so the family is veering off the path just a little bit, and we'll explain that in greater detail a little bit later. But July inflation was released last week, and so still elevated, but it increased at a more moderated pace. We are seeing that inflation slow down just a bit. The CPI rose by 5.4% from a year ago, which is fairly in line with estimates. 5.4% inflation is pretty high. The core index, which doesn't count food and energy, rose by 4.3%, edging a little bit lower from June. Now, the thing to remember there is food and energy. And once again, pure anecdotal evidence, but I don't know if anybody has really looked at their grocery bill in the last few months and seen any significant changes. I know that I have. There was also a study, and I don't have it linked here or listed, but I did read something about restaurant prices had the highest percentage increase since, I think it was September of 1981, which I think could be just, at some point when you've got wages going up at the rate they're going up, that has to be passed on to the consumer, and that's kind of what we're seeing. I drove by a grocery store chain today that was paying its warehouse workers $18 an hour. And by the way, I'm not being political stating whether or not somebody is worth $18 an hour. I'm just stating the pure fact that there is a profit margin that these grocery stores and restaurants have to live by, and when you pay people more money, that is eventually going to go on to the consumer. And so that's what we're seeing in the CPI, even when you add in food and energy. Now, treasuries last week did have some selling pressure during the first half of the week, but good lordy, they recovered the bulk of their losses during a Friday rebound, left the 10-year up and up just 1 basis point for the week, and it was a really, really strong rebound back. Now, we saw crude oil and gold both up a little bit on the week, basically flat. Crude oil is coming down in more of a, it's on a bigger picture downward scale, but it definitely did have a little bit of a rally last week, but it was unable to create a new high. And so by being unable to create a new high, I think we're going to see crude oil fall a little bit more heading into this week. Now, when I talk about the family, I talk about these four markets, S&P, Dow Jones, NASDAQ, and Russell. And when I talk about it as a family, the way I typically refer to it is that the S&P 500 is mom, right? This is mom. Mom is in charge of the family. Mom runs the family. She's in charge no matter what. The Dow Jones, this is dad. Dad thinks he's in charge, but in reality, he moves a lot slower and he doesn't carry as much weight as mom. The NASDAQ is like an 8-year-old, right? It's like an 8-year-old or a 9-year-old. You trust them. They're good. They're quick. They move around. And then the Russell, that's like a 3-year-old. And so when I think about the Russell as a 3-year-old and the NASDAQ as an 8-year-old, I think about this as a family. And this family's walking down a path. And as they walk down the path, sometimes the 3-year-old is going to veer off away from the family. But if the 3-year-old is going off and veering off by themselves, the 3-year-old usually comes back, right? The 3-year-old usually comes back. However, if that 3-year-old decides to veer off and the 8-year-old follows the 3-year-old, right? So if the 3-year-old veers off and then the 8-year-old follows, who then follows? Well, then mom tends to follow and then followed by dad. So, what does that mean? What does that mean for the markets? Well, when I think about the markets, I think about the markets like this family. And so specifically, this Nasdaq family, Nasdaq, S&P, Dow Jones, when the markets are going up, I expect the Russell to be the leader. The Russell is usually the leader, followed by the Nasdaq, followed by the S&P, followed by the Dow. And it typically goes 1, 2, 3, 4. Now, why is that? That's because the beta of the underlying stocks in each of these indexes. In this case, the Russell is down the most. So it's down the most. It's down a little bit, down 0.37. Well, which one is up the least? The Nasdaq is up the least. Mom and dad were still up, but dad was up the most. So if you think about it, it's still in the order of 1, 2, 3, 4. It's just in the order of 1, 2, 3, 4, ranked from weakest to strongest. Well, when that happens, we have to be very concerned that if the Nasdaq turns negative, then the S&P may follow. So I'm still bullish. There's no reason to not be bullish, but just keep that in mind when we look at these indexes working together. All right, let's look ahead. Since I've hit that button wrong 3 times and didn't mean to, let's talk about what we have coming next week, remembering that we are still inside of earnings week. So let's when we talk about our earnings calendar, I say earnings week, we're still inside of earnings season. And when I pull up my earnings calendar, we go to NASDAQ.com. I like the NASDAQ earnings calendar. I think it does a really good job of showing all the important ones, and it sorts it by the market cap. So I see my biggest companies first. So Monday's not a big day. Monday we have BHP Group, which is a pretty regularly traded stock. I don't see a whole lot of other ones on here that I see a lot of traders going after. There are a few more in there, but rest of the week, Tuesday, we have Walmart and Home Depot. So a big day for consumer staples, right? These are both strong consumer staple stocks. Grub, which is, Grubhub, justeattakeaway.com, Nevada, NV. Interesting. I didn't realize that was the actual name of Grubhub. So a couple of Cree is in here. That's a fairly widely traded stock. So a couple of big ones on Tuesday. Wednesday, we've got some of the semiconductors, NVIDIA, Cisco, and then more consumer staples, Lowe's, Target, TJ Maxx. Robinhood is going to announce. It'd be interesting to see what Robinhood does. This is their first earnings announcement as a publicly traded company, so I'd be interested to see what that one looks like. Moving on to Thursday. Thursday, we've got Estee Lauder, Applied Materials, Ross Stores, Kohl's, also BJ's. So a couple of companies on Thursday. And then rounding out the week on Friday, we've got John Deere and Foot Locker, probably the ones that I see most commonly traded as far as traders go. So couple of important ones. I think there's a lot of retail, a lot of consumer staples this week. So keep an eye on those if you've got those inside of your portfolio. As far as our economic calendar, pretty light economic calendar for the week. We've got Tuesday core retail sales. Combine that with all the earnings that are coming out, and we could see some movement on that retail side. And then Fed Chair Powell speaks, and the FOMC meeting visits on Wednesday. But that's all I have for this week. If you got any questions, please send us an email, support@tradersarmy.com. Hope you guys have a great, great week. And I will see you tomorrow for our market commentary. See ya.